back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing and trade at the back of research, on the back of technicals. And for that, we are joined by Aditya Agarwala, who's the head of research and investment, Invest for Edu. And on the research side, we are joined by Ansh. Hi, both of you. Thank you so much for joining us. Aditya, coming to you first, Bajaj Finance is what you've picked out for us. Now, look at these Bajaj stocks, Bajaj Finance, Bajaj Finserv, they're all buzzing away in trade on the back of the fact that, Bajaj Housing Finance's IPO is set to hit the D Street. But tell us, what are you seeing on the charts for this one?
Hi, good afternoon. Thanks for the show. I think both these stocks, Bajaj Finserv and Bajaj Finance, are looking very strong on the charts. And if you take a look at the way both of them have been moving in the past few trading sessions on extremely healthy volumes, it looks like finally the stocks will enter into a new orbit and can hit new highs, all-time highs as well. Bajaj Finserv is almost there to hit a new all-time high. If I look at Bajaj Finance, it's on the verge of a breakout from an ascending triangle pattern. The neckline is somewhere around 7,400, and if it sustains above 7,400 on good volumes, I think stock can easily test levels of 8,100, about 8,500 on the upside. 7,200 on the downside is a very strong support area. So I think overall this is one stock which has been into a long consolidation phase, hasn't done much for itself, anything in the last 2 years. And I think now finally the tide is turning for the stock and can test levels of 8,100, about 8,500 on the upside. People should definitely look at adding this in the portfolio, maybe from quarters to about a couple of quarters time frame. And RSI and MACD both are looking very strong on the charts as well. So overall, it's a very healthy looking chart setup. At current levels, I would recommend to add this stock for a target of 8,200, about 8,400 on the upside.
Okay, so ad call coming in on Bajaj Finance from Aditya. Let's also listen into Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. He shared the key triggers for the financial sector, and he also believes that financials will, as well as FIIs will rebound in India. Let's go across and listen in.
Our sense is that the situation of the liquidity in India, liquidity is in the liquidity, surplus liquidity or lack of it, and the rate scenario in India will also eventually turn with the global interest rates turning, and that should brighten up the outlook for the one or two larger banks, which particularly suffered due to lack of liquidity. That's the first thing. Secondly, in the financial space, which has been FI's favorite for a long time, I think with the specter of rates coming down, the non-banking space or the medium-sized banking space, where the lenders have a fixed asset kind of a book, that will start to look very exciting. So I think overall we are expecting that finance sector, which had seen the brunt of the selling, should do well going forward, and that's how we think the FI's flows comes back. Hopefully during the rest, as the Fed cuts rate towards the later part of this year.
Okay, on that note, let's shift focus, talk about two top buzzers in today's trade. Big buzzers today, you have Gujarat Gas as well as GSPL that are in focus, because Gujarat Gas, GSPC, GSPL and GEL will be merging. All of these will be merging with Gujarat Gas. Now, post the merger with Gujarat Gas, the pure play gas transmission unit will be carved out, which is called GSPL Transmission. And GSPL Transmission will be listed on the stock exchanges. While this has been the news flow, well, let's also take a look at what brokerages are making out of this news flow. First up, Equities on Gujarat Gas, they've upgraded the stock to an ad rating from reduce, hiked the target price to 667 from 580 rupees earlier. They believe that Gujarat Gas will emerge as one of the largest integrated players. They're already sitting on the huge cash flow of above 3,500 crore rupees, and they still have potential for more generation. EPS accretive from the first year is the view coming in. Moving on, let's talk about MK on Gujarat Gas. They've upgraded the stock to a reduce from a sell rating, hiked the target price to 600 from 500 rupees. They believe that the valuations are implying more than 50% EPS accretion for this deal. The merged entity would benefit from the size and simple structure, but however they're also flagging some challenges, likely being the complexity of the business with global gas exposure, capital allocation and numerous Gujarat government entities still holding sizable stake in the company. But well, yes, the merger as well as what brokerages are making of the merger are the triggers for Gujarat Gas as well as GSPL today. Gujarat Gas has been holding above those 10% levels as of now at 9.6. Gujarat State, however, was deeply in the negative and now has reversed all of those losses, up 3.5%.
That's the news coming in on Gujarat Gas. But We'll move on to another stock that is another area that is in focus, and that is the auto pack. The auto sales numbers for the month of August have trickled in. Tata Motors is in focus. In fact, it is reeling under selling pressure because of the auto sale numbers that, of course, the street has not given a thumbs up to. It has been below expectations. In fact, the total sales, fell 8.1% to 71,693 units versus 78,010 units in the previous month on a sequential basis. Now, commercial vehicle sales were also down 15% on a month-on-month basis, and the passenger vehicle sales also saw a sharp drop of 3.15% to 44,486 units compared to 45,933 units in the previous month. So on the back of the set of numbers that trickled in, the drop in the sales coming in for Tata Motors is reeling under pressure with a cut of over 1.5%.
Let's move on away from autos. Talk about Fortis Healthcare. On the back of an acquisition, this stock is buzzing. Tell us more details about it.
The stock is trading with around 1.6% of gains. In the morning, it was up by around 2.5%. So, company is set to acquire an entire stake held by PE investors in Agilus Diagnostic. So, which is around 31%. So, the Agilus Diagnostic is a material subsidiary of the company, and presently company holds around 57% of equity stake. In addition to utilizing its internal accruals, the company will also be raising funds through issuance of a listed senior secured rated NCDs as well. Also, if you see the chart, then the stock seems to have given a breakout from its 5-session consolidation pattern if we close above that 555 level. Apart from this, we are seeing that the stock has also touched record high level, advancing for 7th consecutive month now.
Right, moving on, Aditya, coming to you, Chumble Fertilizers is the name that you picked out for us. This stock has done pretty well for itself. In fact, given more than 50% gains in the last 6 months. Tell us, where do you see this headed from here on?
Okay, the stock had entered into a sideways consolidation in the last couple of trading weeks. Now looks like it's gearing up for a breakout above trendline resistance, which is close to about 540, 542 odd levels. If it successfully manages to close above that trendline resistance and sustain above that in the next couple of trading sessions, I think stock can easily test levels of 610 to about 630 on the upside. On the downside, supports are at 510 to about 520 odd levels. What is interesting is slowly the volumes are also coming into the stock as we see green ticks for the last couple of trading sessions. So that tells me that the moment you see a big breakout on the stock, you will have higher volumes as well, backing the breakout, and then you can easily see levels of 610 to about 630 on the upside. The MACD has also crossed over its trigger line, which is a confirmation of a trend reversal in the stock, and after consolidation, I think it's time to look at the stock again and will head to levels of 630 in the near term.
The view on Chumble Fertilizers. Let's also shift focus and talk about MOIL. Now, this is a stock that has been tanking away as of now, also around 4.5% lower is where the stock is. Now, the stock price has slipped after the company announced that effective 1st of September, it has reduced prices across several categories of manganese ore as well as related products. The ferro grades with manganese content of 44% and above will see a 20% price reduction from the rate set on 1st August 2024. Ferro grades with lower manganese content as well as SMGR, fines and chemical grades will have their prices decreased by 15%. This is effective from the midnight of 31st August. So on the back of these price cuts that the company has gone ahead and undertaken, you have MOIL deeply under pressure as of now, almost 4.5% lower.
Alright, that is MOIL reeling under pressure, but the other stock that is also reeling under pressure is RVNL. Now, it is happening on the back of a block deal that has come through. UBS Principal Capital Asia has sold 0.63% stake at an average price of 606.83 rupees per share, amounting to rupees 797 crores for RVNL. On the back of that, we see the stock reeling under pressure today, trading with cuts of 1.3% right now.
Ankita, very surprising. We've taken RVNL on a day where it's falling because we only seem to be talking about order wins when it comes to RVNL. So quite some reversal we're seeing on this front. But Aditya, you've picked out Titan, and if I see Titan on the charts, in fact, not much happening. It's a very sluggish move that this stock is seeing. Do you expect this stock to pick up some momentum, pick up some steam now?
Sneh, because if you, as you mentioned, stock had entered into a sideways consolidation, didn't do much for itself in the last few trading weeks. What is interesting is it did manage to take support at the 200 DMA, and from there it's bouncing back. If you take a look at last two trading sessions, up move from 200 DMA, it has managed to inch higher. And also the risk to reward is now in favor of going long in the stock. So at current levels, I would want to go long on the stock. It's still breaking out of a narrow consolidation phase. The moment it starts to trade beyond 3600, I think so stock will test levels of 3700, about 3800 on the upside. So you have decent upside still left in the stock. For a target of 3800 can be bought with a good support on the downside at 3550 to about 3500. And plus, as I closely monitor the two technical indicators, RSI and MACD, both are suggesting that a big up move in the stock can follow through anytime soon.
All right, that's the word coming in for Titan from Aditya. But moving on to Ansh, you have picked out BIOCON for us. This one is in focus in the back of a US FDA, inspection, and on the back of that, it's trading with gains of almost 1% now. Tell us what's the full story on this?
So the company has received an establishment inspection report from US FDA for the Greenfield API facility located in Andhra Pradesh. This is based on a pre-approval inspection conducted by the agency between 10th and 14th of June of 2024 itself, and now allows the company to commence its commercial supplies from this facility to the US market. Now, apart from this, we are seeing that the wholly owned subsidiary BIOCON Pharma has also received US FDA approval of its ANDA for daptomycin for injection used to treat complicated skin and skin structure infections. So for those reasons, the stock is in focus.
All right, we will move on to a segment, a pack that is also in focus today, and that is a cement pack, and that is in focus on the back of a note that's come out by Macquarie. Let's look at the names that Macquarie is mentioned in its note. Dalmia Bharat, they're maintaining an outperform, and they've hiked the target price to 2,176 rupees. ACC, they're maintaining a neutral, and they've cut the target price. So we'll see, ACC reeling under pressure. They've cut the target price to 2,508 rupees, and Ultratech Cement, they're maintaining a neutral, but they are hiked the target price to 11,106 rupees, and both Ultratech and Dalmia, since they have hiked the target price, we can see the uptick coming in on both the stocks of over 1.5%. Now they feel that Macquarie says that the consolidation bodes well for medium-term margins, and near-term risks still persist, but healthy demand and cost moderation has offsetted by the muted cement prices. They expect the Q2 and Q3 earnings to remain subdued, but the sector consolidation bodes well for the medium-term margins. Delivery and cost efficiency targets could also be a margin accretive, but they suggest waiting for better entry points and better earning visibility and valuation. So that's the word coming in from Macquarie on the cement pack. On the back of that, cement pack is in focus today.
Okay, so that's on cement pack, but Aditya, you also picked out one cement stock for our viewers today, and that is Ramco Cement. Now, if I take a look at the last 6 months, or in fact, if you take a look at this on the YTD basis, you have negative returns coming in. So now, what's your view? Can we expect some reversal? Can we expect some momentum in this stock going ahead?
Yes, Sneh, absolutely. In fact, as we speak about the cement pack, the names that we just spoke about, most of them have seen a significant rally and up move already. The one which stands out for me now, which offers an excellent risk to reward, is Ramco Cements. As you mentioned, stock hasn't given any positive returns year to date, and that is one of the reasons why I see a good consolidation taking place in the stock. And at current levels, it offers an excellent risk to reward as well. It's just breaking out of a bullish cup and handle pattern, and I think the stock can easily test levels of 870 to about 900 on the upside. On the downside, 820 is an immediate support level. So again, as I mentioned, it offers an excellent risk to reward with 820 as a stop loss and 900 as a target. One should definitely look at adding the stock in the portfolio. And RSI has also moved into a bull territory, which is above the 16 level mark, which tells me that it's time to look at the stock from a long trade, and that definitely can give you much better returns than the rest of the cement pack.
Okay, so I had called on Ramco Cements from Aditya. Let's move on, talk about NCC. Now, NCC shares jumped in today's trade after getting an order worth 1,236 crore from the state government agencies in the month of August. Now, these orders are mostly for the irrigation division, with projects coming from various state government agencies. The contracts contain no internal orders, highlighting NCC's expertise in infrastructure projects as well. And the corporation has reported that the job duration for these projects is fixed at 30 months on the back of this order win coming in of 1,236 crores coming in from various government agencies. NCC holding up pretty well, almost 2% higher in today's trade.
All right, moving to the other stock, IDFC first is what you picked out for us, Aditya. This stock hasn't done anything for the investors in the last 6 months. In fact, it's only the last 1 month, a couple of weeks that it has really started picking up. Tell us what you see on the charts for this one.
It's a very interesting looking chart setup. If you plot it on a daily or a weekly time frame, Ankita, it is oscillating in a downward sloping channel, touches the upper end and then claws back to the lower end of the channel, and then from again you see buying in, and again the stock touches the upper end of the channel. What we recently saw was stock actually touch the lower end of the channel again, and from there it's seeing a good bounce back. As we speak, stock has broken out from a bullish flag pattern as well, and I believe that from current levels, stock will again head back to the upper end of the channel. So there is definitely a trading bet here on the upside. Stock can easily test levels of 80, 85 odd levels with a good support on the downside at close to about 74 odd levels. So definitely I would look at going long on the stock at current levels with the stop loss just below 74, and look for a target of 80 to about 85 on the upside. And plus volume has also been picking up in today's breakout. So that tells me that this breakout is here to stay and definitely can see much higher levels in the coming trading sessions.
Okay, that's the view on IDFC.